Can we please just talk about this Apple buyback? $100 billion. Everyone else is talking about it. Should we weigh in?
I think we should.
Okay. You weighed in on your blog.
I did.
What were you talking about?
So they just announced a $100 billion share buyback. Since 2013, when they really started getting going in earnest, which is a phrase I like, they bought back $175 billion worth of stock.
And the first buyback through now.
And there's a lot of negative stigma around buyback. It's manipulating share prices. It's not being it's being used instead of innovation, instead of hiring and all that sort of stuff. But that is like the last decision that is made. Companies wish to have all this excess cash. Right. So, but it has not come in lieu of research and development, because Apple has spent $41 billion on R&D over the same time. At
the same time, they're buying back 100-something billion worth of stock. They do another 40. Should they have done more than 40 billion in R&D? On what?
I don't know. So companies can do three things with their cash, with their profits. They can sit in short-term cash and equivalents. They can return it to shareholders in the form of dividends or buybacks, or they can invest it, R&D. But matter of fact, if you were to buy a basket of high investment companies, that is not a good use of capital empirically.
The companies that spend the most on R&D don't necessarily become better investments than companies that buy back stock.
Yeah, no, not at all. Or what Apple can do is they can acquire, which is not the game that they play. So they have enough money, more than enough money, to buy Qualcomm and Twitter, for instance. Would that be a good use of capital?
Right.
So, would it, Josh?
Well, if they did, then you would have the same people writing these negative articles about buybacks would say, this is the top of the market. Apple just paid, God knows how much money for whatever acquisition. Remember when they bought Beats from Dr. Dre? It was $3 billion.
Yeah.
It was like pennies.
Right.
And people went wild,
right,
screaming at them. So
if they bought Broadcom or Cirrus Logic or any of their suppliers,
right,
the media would go nuts.
And that doesn't necessarily help shareholders either.
Right.
So Apple is going to do $100 billion, I think they said, over the next 6 quarters, which is still a lot of money, but it's relative to the size of Apple. It's not like they're breaking a record of all-time buybacks as a percentage of market cap.
Right. So right now it looks like they're being prudent. They're staying in their lane. They're repurchasing shares. They just raised their dividend. It's the most profitable company in the world. They have to do something with the cash.
Why do people think dividends are good and buybacks are bad?
It's a bird in the hand. So you see the dividend, but economically it's the exact same calculation. And after taxes, it's less efficient to receive the dividend, even though it feels good to see it come in.
Right. So a lot of the people that are talking about just give me a dividend, but so then the end investor gets to pay taxes on that dividend, whereas a buyback there is no tax. So I'm not sure why one is more virtuous than the other.
I think because of these giant buyback programs in the past that we're easily able to recall, like Cisco in the 90s or Microsoft in the aughts. But you don't think
GE.
Right. All of these that led to nowhere, that were sort of a sign of the times.
So that's the availability bias.
Correct.
People remember a monster buyback from another era that didn't turn out well, and they say, see, that's what's going to happen here.
But like I said, the alternative is return the cash to shareholders or high investment, which again, Jack Vogel proved empirically is not a good use of capital.
Right. So Apple basically can't win, except they continue to win. Even when people say that they're doing the wrong thing with the money, so far it's been the right thing, and they've been doing it for a long time.
Mm-hmm.